Why the Bitcoin ETF went down in flames. Hello and welcome to Smaulgld's analysis of the SEC's decision to reject the Bitcoin ETF on Friday. And what that means, SEC rejects rule to allow Bitcoin ETF. Massive Bitcoin trading on unregulated exchanges was the key factor in the SEC's decision. On Friday, the price of Bitcoin swung nearly $400. I think it was a high of $13.50 and it hit a low of $9.75 immediately after the decision that the ETF would not be allowed. I have believed that the Bitcoin ETF might have destroyed the Bitcoin ecosystem and its value as a currency. Now, many people thought that the Bitcoin ETF would have been a great thing, would have brought some additional institutional money and driven the price sky high. Now, we perhaps will never know, but we'll get into that as we go through, first of all, why the SEC declined to approve the Bitcoin rule change that would have allowed the ETF to go forward. By the way, if you're interested in helping Smaulgld present these types of analysis, you can donate via PayPal or via Bitcoin at the links below this YouTube or on the Smaulgld website. You can also become a Patreon. I do not yet have a Patreon. I have many donations via Bitcoin and via PayPal, but I do not yet have one Patreon. So if you want to be the first historic Smaulgld Patreon, you can do so by clicking the link below this YouTube. Now, Bitcoin ETF goes down in flames. The U.S. Securities Exchange Commission rejected an application to a rule change that would have paved the way for Bitcoin ETF tradable on the New York Stock Exchange. As I mentioned, many Bitcoin aficionados thought that this would be a great deal for Bitcoin. It would validate Bitcoin and therefore provide some type of stimulus for further price gains, as the ETF would attract large institutional capital. Makes sense. Now, here are some of the reasons, however, why, as a Bitcoin holder, you might want to have been opposed to this Bitcoin ETF. We speculated, based on the disclosures in the Bitcoin registration statement filed with the SEC, that it may have harmed Bitcoin and the Bitcoin ecosystem and ultimately its price. And here's why. The proposed Bitcoin ETF had no limit on the amount of Bitcoin it could buy or sell. And you say, well, that's great. They just keep buying it. The price keeps going higher. I'll say it again. No limit on the amount of Bitcoin could buy or sell. Now, this would inevitably create greater volatility, making Bitcoin's use as a currency less attractive than it is today, and making Bitcoin as a safe haven asset for institutional investors highly unlikely. If the price they see these swings like they saw on Friday, there's no way that most institutional investors will hang on. They will, if they do, indeed, they will trade it as a speculative asset. They will not stay around for large swings up or down. And remember, one large sale down from the Bitcoin ETF could have driven the price down 20-30%. And if there was no corresponding institutional interest or private interest to recoup those gains, those institutional investors would be stuck with large losses, and they probably would want to stay away from a Bitcoin ETF, and which would mean that the price itself would be, in many instances, dictated by the trading of the institutional investors in the Bitcoin ETF, because the market cap of the Bitcoin in total is not very large in terms of Wall Street scale. Also, the Bitcoin ETF would have had to settle its trades on small, relatively illiquid, unregulated Chinese exchanges and in dark pools, this creating instances where new trades may not be effectuated, diminishing the faith in the ETF. So you're an institutional investor, you got some money, you want to throw it at Bitcoin, you're allowed to put it into an ETF, you do it, and there's just no Bitcoin for the ETF to go and buy. They just can't find it at the price, and that makes investing in an ETF not so convenient. You have money to put to work, and you can't put it to work because the Bitcoin ETF can't find the Bitcoin to buy. Or, same thing, they go to sell it, Institutional investor wants to sell a large part of his ETF. Same thing happens. Either they can't find buyers to sell, or they just drive the price down so significantly that it destroys the whole concept of investing in the Bitcoin ETF as some type of safe haven asset. Because yes, eventually you'll find buyers and sellers at prices when you introduce large blocks into the market, but there's not even one market. There's many unregulated, these Chinese markets, so it's very difficult to get some type of price discovery. And if even if you do get price discovery, you're going to discover that the prices are going to swing wildly. So the volatility itself would have not only harmed, I think, the Bitcoin ecosystem, but the trust itself, the ETF itself, because it would not be an attractive vehicle to buy anything if its own actions cause this type of price swing up and down. Now, if Bitcoin did manage to attract more capital, despite the speculative nature of the trust and despite all the volatility it might have engendered, well, then you'd get a greater percentage of Bitcoin being locked up into the Bitcoin ETF, which means fewer Bitcoins and entities would be trading Bitcoin as a currency, but rather buying and selling it as a speculative asset. So the Bitcoin ETF may have severely interrupted a naturally developing market that has already been plagued with volatility issues, but it's still, the price of Bitcoin is still heading higher despite the growing pains that it's having, issues with, stability when you have excess transactions and so on. But Bitcoin seems to have been dealing with all of this. I'm not certain that introducing an ETF, almost as a foreign body, a virus into the system, would have been something that the Bitcoin ecosystem could have handled and would have changed, I think, the tenor and nature of what Bitcoin is becoming or had been becoming before the introduction of the ETF, which now is not going to happen. Switching gears, if you're interested in buying gold or silver, you can do so through the Smaulgld site. Smaulgld gets a small commission, full disclosure, if you buy through the site, but you pay no more, no less than if you were to visit the sites directly linked on the Smaulgld site or at the links below. We have affiliate agreements with BGASC, Golden Eagle Coins, JM Bullion, Money Metals Exchange, and for the USD Bullion fans, you can also go to the website Smaulgld and buy through there. You can compare pricing and shipping, and you can buy your gold or silver through Smaulgld. So that's another way of helping Smaulgld out besides donating through the site. It's not investment advice to buy gold or silver, but if you've made the decision that's what you'd like to do and you'd like to help out Smaulgld, you can do so by comparing pricing and shipping at the affiliate links on the site and below this podcast. Now, why did the SEC reject the Bitcoin ETF? They don't care whether the Bitcoin ecosystem lives or dies. That's not their concern. The SEC did not reject the ETF because of the harm it may have caused to Bitcoin or the ecosystem or even current Bitcoin holders. That's not their concern. But they were concerned because of the inability of the SEC to monitor the functioning of the trust due to the unregulated nature of Bitcoin trading on the Chinese exchanges that, according to the SEC filing at the time, constituted 98% of Bitcoin trading. Now, if you think about that, 3 or 4 years ago, proponents of Bitcoin were not saying that Bitcoin was going to rise because it's going to become a darling of the Chinese exchanges and all Bitcoin will be traded there. No, the idea was more people were going to use it as a currency and that velocity was going to drive the price higher. Just an aside. However, I had an exchange with David Seaman. He was he still is a big Bitcoin proponent, and he makes the valid point that the Wikiloff twins, or whatever I forgot their name, they were the proponents behind the ETF was, and remember this was filed I think in 2014, so it's been a while. And his question is, if they don't get this ETF approval, what have they been doing all these years? It's a good question because, and my quick response was, because I had been reading the registration statement and looking at the SEC filings, was, well, one thing they're probably trying to do is explain the risk of having 98% of Bitcoin trading occur on these non-regulated Chinese exchanges. Now, you would think, to me, this is obvious, that why would it take 3 years for the SEC to make a decision when it seems like if you read what they say about the risk of that and how they really can't oversee what's going on, you would think they could have rejected this application when it first landed on its desk. Now, I suppose the 98% trading on Chinese exchanges didn't exist in 2014, but still, this is something that doesn't seem to be that difficult to figure out from the SEC's perspective. And in the prospectus itself, in the registration statement, it said, for example, current estimates suggest that approximately 95% of global trade volume in Bitcoins occur on self-reported, unregulated exchange located in China. And I picked up on that right away. And I said, well, they can't approve this because they can't know what's going on. If China, and they go on to say, this is the disclosure from the Bitcoin ETF in the SEC document, probably put there because the SEC requested that they put it there for full disclosure. If China were to regulate the Bitcoin trading on Chinese Bitcoin exchanges in a manner that materially restricted liquidity in trading, as we just talked about above, it could have significant impact on the price of Bitcoin globally. So you're left to the dictates of whatever the Chinese government decides to, whether to regulate, to freeze, to outlaw the Bitcoin exchanges in China. Such regulatory actions or restrictions could adversely affect the investment in the shares and result in the termination or liquidation of the trust at a time that is disadvantageous to shareholders. Now, we need to make a distinction here about what the SEC did. There was a lot of terminology that was thrown around that the SEC was going to approve the ETF. The SEC doesn't approve or disapprove of securities listed on exchanges. What they do is they review the filing of the companies that want to list their securities. But they take great pains to note neither the Securities Exchange Commission or any state securities commission has approved or disapproved of the securities offered in this prospectus, or determine if this prospectus is even truthful or complete. And any representation to the contrary is a criminal offense. So you say, well, that's pretty much says that the SEC absolves itself from what's in the document, and that is absolutely correct. They don't approve or disapprove of what's in there. What the SEC is there for is to make sure that the issuers that want to put securities on the market disclose all the risk. Well, then you say, well, what's the problem with the ETF? It's a big deal. They come flat out and they say, look, estimates suggest 95% of the global trade volume in Bitcoin occur on self-reported, unregulated exchanges. There, we told everybody. They know that. They also know if China were to regulate Bitcoin in a manner that materially restricted liquidity in trading, we might lose our investment. So why did the SEC not approve this? Well, there's two things. The SEC doesn't approve the registration statement, as it says. It doesn't approve or disapprove. The issue here was they were approving a rule change that would have allowed the ETF to go forward. So if in the case where you have, so the SEC is not going to determine the worthiness of the investment, but they're just going to make sure that the issuer gives the disclosure adequately in the registration statement, which includes the prospectus that supposedly the investors read, and they would find out that 95% of the global trade in Bitcoin occurs on these self-reported, unregulated exchanges. But many observers, I was going through Twitter, people thinking that there was some kind of double standard that the SEC had it in for Bitcoin, and they were rejecting the Bitcoin ETF because the SEC had approved other risky stocks like Snapchat. And I can understand that misinterpretation, but the SEC was not rejecting Bitcoin as a security. And we're going to discuss Bitcoin status, whether it's a commodity, currency, or security below. Just hold that thought. But they weren't rejecting Bitcoin as whatever, security or currency or commodity, like a share of Snapchat, but rather the ability of this Bitcoin ETF to be established. Because in order to be established as an ETF, the SEC has to have certain oversights over what goes on in the ETF. So companies like Snapchat don't have their registration statements approved, but rather reviewed by the SEC through this iterative process where the issuer, Snapchat, sends information to the SEC pursuant to certain rules and regulations that are that contain the disclosure requirements. The SEC looks at and says, well, you say here you don't do this, you don't do that, you have these risks, please explain. And it takes months and months to go through it till the SEC is satisfied. They don't approve it. They're satisfied that you have answered all the questions, that the registration statement and prospectus contain all material information, don't have omissions, so that if somebody wants to buy something that's really risky, well, they've been made fully aware of it through the registration statement. Now, the decision by the SEC regarding whether the Bitcoin ETF would go forward was based on a requirement that the SEC change a rule. Now let's get into the rule change. This is the meat of the matter here. The SEC rejected the request for a rule change that would have allowed the Bitcoin ETF to go forward because first, this is their language, the exchange must have surveillance sharing agreements with significant markets for trading the underlying commodity or derivative of that commodity. And second, those markets must be regulated. Well, what did we just say above? The exchanges that we're talking about where the Bitcoin is traded, where the Bitcoin Trust ETF would buy its Bitcoin and sell its Bitcoin. Well, if they're unregulated by the Chinese government, there's no way that the SEC could have some type of sharing agreement and to check in on how the Bitcoin is being traded. They're not going to be able to check out the dark pools where Bitcoin is trading, and they're not regulated. So to me, this is a slam dunk why the SEC would not approve it, because they would have to have some ability to know what's going on. They couldn't even count on the ETF to self-report because they probably don't know what's going on in these exchanges either. So, based on the record before it, the Commission believes that significant markets for Bitcoin are unregulated. Yeah, of course they are. Therefore, as the exchange is not entered into and would not currently be able to enter into the type of surveillance sharing agreements that has been in place with respect to all previously approved commodity trust ETPs, agreements that help address concerns about potential for fraudulent or manipulative acts and practices in this market, the Commission does not find the proposed rule to be consistent with the Exchange Act. Now, other commodity type things where you have trading of, for example, gold and silver. Now you could say you don't like how they are regulated, but they are indeed, at least for consistency purposes, technically they are regulated. There's a CFTC, and the SEC could examine what's going on in those markets. Here they're saying they could not do that with these Chinese markets. And remember, the unregulated nature of Bitcoin, after all, has been what many Bitcoin proponents have said is its strongest feature. So I would think that if you like Bitcoin, you're probably thinking this is a good thing that the SEC does not have regulatory oversight, because in its words it can't, because the trading occurs on unregulated Chinese exchanges. But the issue remains now, and this is even more important than the ETF, will it remain that way? So what's next for Bitcoin regulation? Now, regulators have been careful not to immediately make definitive pronouncements or impose regulations or outlaw Bitcoin, as it appears to me that they want to see how this whole thing is going to develop. Now, this is from the Bitcoin registration statement. Again, IRS says Bitcoin is property, not currency. That's my heading. Now, on March 25th, 2014, the IRS issued a notice. I'm not going to read this whole thing here, that basically said for federal income tax purposes, Bitcoins are property, and that it's not a currency, and therefore Bitcoins are capital assets, and they'll be taxed that way. Well, it's no surprise that the IRS is the first agency to declare what Bitcoin is, because if people don't know what it is, then they can't collect taxes on it, and they can't tax it effectively. So, before this came out, I had speculated what was going to happen with Bitcoin in 2014 and how it would be viewed. And my question was at the time, amongst other things, was would Bitcoin be itself called a security? And before the IRS ruling and before the CFTC called Bitcoin a type of commodity, which is important as well, because when the CFTC called Bitcoin a commodity, that makes it possible for future swaps and other CFTC regulative derivatives based on Bitcoin to be offered and traded, which you know what derivatives means, and you can create certain types of short selling products on it. And Bitfinex in China actually allows short selling of Bitcoin. A lot of people think that Bitcoin is pure in the sense that there's a one-to-one correspondence in the trading. You have to have a Bitcoin to sell a Bitcoin, but that's not necessarily true. But that's an aside. But in any event, if Bitcoin is security, I had asked prior to the ruling by the IRS, what's going to happen once Bitcoin is traded on exchanges, especially ones located in the United States. Once they know who the Bitcoin users are, they want to tax them. This is prior to the IRS ruling. I wrote this. If Bitcoin is traded in an ETF, this was, I think, the link to the Winklevoss twins. This is back in early 2014, 3 years ago. And the bulk of Bitcoin changes hands from large private individual holdings, which at the time, the original early Bitcoin adopters had half the existing Bitcoins, to institutional investors and to the government through confiscation. Now, the government could confiscate an exchange, the Bitcoins on an exchange if they thought there was something going wrong there. Well, then taxation and regulation on Bitcoin could easily be imposed. Paradoxically, more regulation will also mean that Bitcoin will be subject to greater manipulation. And I think if you had a Bitcoin ETF, you clearly would have had a lot of arbitrage and you would have had a lot of volatility and manipulation in a manner that might not have been advantageous to Bitcoin holders. And so I had questioned which agencies might regulate Bitcoin. And I suggested the SEC, which is the one that rejected the Bitcoin ETF, they might throw their hat into the regulatory ring based on the concept that Bitcoin could be deemed a security. Now, if Bitcoin is deemed to be a security, then sales of it would be regulated. So you could not, unless you file a registration statement explaining exactly what Bitcoin is, trade amongst each other in private exchanges, technically, because you would be trading them not subject to proper disclosure. Now that sounds kind of extreme, but the SEC said back in 2013 whether a virtual currency is a security under the federal securities law and therefore subject to our regulation. Like right now it's not, and it's certainly not now that they don't have the ETF, but they were going to regulate or not regulate Bitcoin, but the ETF through by sharing information or surveilling the exchanges. But here she's saying that whether a virtual currency or like Bitcoin is a security under federal laws and therefore subject to a regulation is dependent on particular facts and circumstances, which they did not go into and do an analysis. I've done that if you hit read more on why Bitcoin may be a security. But basically, they're saying that if it is a security, then it's subject to their regulation, and that creates a whole new set of burdens on Bitcoin trading. Now, fast forward to the Bitcoin ETF registration statement, which of course probably no one looked at. It says that the SEC indeed is examining giving security status for Bitcoin. I'll check this out. To date, the SEC has not asserted regulatory authority over the Bitcoin network. It's pretty presumptuous that they might indeed try to propose such authority over the network, but they could claim the right to do so, or Bitcoin trading or ownership. And it's not expressed the view that Bitcoin should be classified or treated as a security for the purposes of U.S. federal securities laws, as I predicted they might. Then it says, however, this is a very important line here. The SEC has indicated that the subject of Bitcoin's regulatory status is under review, which means they could decide to take regulatory authority over Bitcoin. They could decide to deem it a security and all the additional oversight that requires and restrictions on the sales of securities. In addition, it has commented on Bitcoin and Bitcoin related market developments and has taken action against investment schemes involving Bitcoin. And here's another line that shows they are definitely thinking about declaring Bitcoin as a security. It's the SEC, and this is coming from the Winklevoss twins, the Bitcoin ETF, but they're writing this risk because they know it is possible, and that's why they have to include it in the registration statement. If the SEC were to determine that Bitcoin is a security, the trust and the sponsor would be subject, of course, to additional regulatory and compliance requirements under the U.S. federal security laws, including the Investment Company Act, and with respect to the sponsor, the Investment Advisors Act. So I would think the SEC, had they somehow approved of the rule change, well, the next thing they probably would have done was accelerated the review on whether Bitcoin is a security so that they can have further oversight. So again, probably a good thing that the ETF was not approved, because if it was, the SEC people probably would have looked at it and said, this oversight is not enough. That's probably why they rejected it in the first place. But somehow, if they were convinced that it was enough, it would only be enough if they then went ahead and looked at whether Bitcoin was a security, deemed it such, and then threw more oversight onto the whole ETF and the Bitcoin trading system. And then it says regulatory changes or interpretations could cause the trust and the sponsor to register and comply with new regulations to deal with the SEC, resulting in potentially extraordinary non-recurring expenses to the trust. Current and future legislation, CFTC and SEC rulemaking, other regulatory developments may impact the manner in which Bitcoins are treated for classification and clearing purposes. And it says they may be classified by the SEC as securities under federal securities law. This is something I warned about in 2014, and it looks like they spent a lot of time warning investors who might buy this trust that Bitcoin may one day become a security for purposes of the SEC. Then it says, we're not aware of any rules that have been proposed to regulate Bitcoins as a commodity or security, but you never know. And then it says, to the extent that Bitcoins are deemed to fall within the definition of a security under the federal securities law, the trust may be subject to additional requirements on the Investment Company Act, the Investment Advisors Act, and they may be required to register as an investment advisor on the Investment Advisors Act. So even if they had gotten approval for the rule change, this ETF would have drawn more regulatory scrutiny to Bitcoin and the entire ecosystem, and more expense for the trust. And if the trust actually ran into a lot of difficulties, a lot of expenses, remember, if they have to expend money, well, where are they going to get the money from? They're going to have to sell. I don't know. I didn't read the part where their expenses are covered. If they're not covered, then they don't have the ability to operate the trust. And if they have to close the trust, that's a huge black eye for Bitcoin. And then what do they do with they have to liquidate the trust. So it's probably a much better thing. Even if the Bitcoin ETF was functioning properly, would have been, I think, a big interference in the Bitcoin market. But if somehow they got regulated in the wrong way and it caused them to have to liquidate or have extraordinary expenses, it would have been a massive disruption to the Bitcoin ecosystem. And then finally, we don't know what's going to happen with other governments or other state regulators and so on. So I think that the fact that the Bitcoin ETF didn't go through is probably a good thing for those that are interested in the future of Bitcoin as an independent cryptocurrency, although I would not think that regulation has been kept at bay. I think they're still looking at it, and I think at some point there will be more regulatory pronouncements, which will probably shock the Bitcoin community, and they'll think, well, they can't do this, and we'll just have to wait and see. I don't really know what's going to happen. I just throw out there what I've seen in these documents. Thank you very much for listening.